What's going on, everybody? This is Caddy with Money Vesting. So we're going to talk about the markets a little bit. I know there's a lot of fear, there's a lot of uncertainty related to the markets and where are we potentially headed. What's going on, everybody? It's Caddy with Money Vesting, so I hope that you all are hanging in there. I know the markets are rough, quite rough today, with the S&P and the NASDAQ. They're both down substantially. And so we're going to talk about some of the stocks. We're going to go over the broader markets as well. You guys can hear me okay, right? You should be able to see the screen and hear me as well. So let me know in the live chat if you guys are able to see me and able to hear me okay. So yeah, I mean the NASDAQ is down over 1.3% and the S&P is also down in the red, down about 20 basis points. So definitely we're seeing a lot of momentum, a lot of weakness. There's just so much pressure. From the markets. It's like we can't get absorbed. Now again, I put out a video today going over the macros. If you guys did get a chance to watch that video, I would highly encourage you to check it out because we're not in the clear yet. There's some more downside that I potentially labeled in my sort of estimate for the NASDAQ and the S&P, right? So if you guys watched that video, I mentioned a specific level to watch for the NASDAQ and the S&P. We're not quite there yet. The NASDAQ is trading, let's see, as low as we're down to 12,500 today. So we're officially in a correction territory. Yes, so from our all-time highs, we are down a little bit over 11%. So again, we broke down below those moving averages as well. And for the S&P, that's going to be ticker symbol SPX. We are down, I want to say, over 6%, so we're not quite in a correction territory yet, but we're down a little bit over 4.7, almost 5%. But some of those stocks, I mean, it is absolutely crazy. I mean, look at this. Look at this. Look at this chart. It is, and if you were to look at the greens, I mean, Boeing is down over 3%, GameStop is up over 6%, but then Chevron up over 3%, Procter & Gamble up over 3%, we've got ExxonMobil up over 2%, Johnson & Johnson, Intel, AT&T, Microsoft still staying up there, and Google. But that's about it. That is it. Everything else, like, it is just absolutely a bloodbath. It's just crazy. Yeah, no matter how bad it gets, we still put a smile on our face. Yes, because it's part of the markets. This is not the first time it's happening, guys. I mean, so the best way for us to go through this, and trust me, this is an experience that we're all going to take away 10 years, 15, 20 years around down the road when we come live again, right? It's 2030. I'm doing a live stream once again, and the markets are down 3%, and you all are here with me. We're gonna look back to the same time, and we'll have this experience with us, right? The best way to know exactly how that feels is actually to go through this process, right? To go through this experience and to really understand what it's like to be in this market, to be investing in this market. If you're still buying like I am, you're putting your money, you're basically throwing it into a fire pit, right? It's like, it's a bloodbath. Everything you buy is red. Everything that you buy is down. right? Except for like energy and some like financial, like even banking stocks today. Like let's go over to the banking sector, right? So you'll notice that banks even they're down in the red. PayPal down over 3%, Goldman Sachs, Wells Fargo, JP Morgan, Citigroup, MasterCard, Visa, Bank of America. It's just like, you know, it's just red all around. For everybody who's just asking, you know, when will this end? When will SPY turn green? When we're going to see a recovery? I would highly encourage you guys to watch my video that goes over the macros, the fundamentals, evaluations. I put a price target, I put a bottom on there. Victor, Powell is killing us. Powell is not killing us, and I'll tell you why he's not. Because we don't want a market that's artificially propped because of some person that comes on board online and says something. It's great for the short term, but over the long term, we need more organic growth. We need more organic. Basically, the markets need to go up because they want to go up, right? Not because if he comes up. And that's one of the reasons why we have seen so much volatility on the S&P. So you'll notice that, you know, one day we're up over 1%, the following day we're down over 2%, the next day we're up over 2%. That creates unnecessary volatility for the market. So that's what we don't want. We want the markets to contract, pull back, and of course, growth and tech has a big piece to that because it has such a big influence on the S&P and the Nasdaq, right, on the broader markets. So that's something to consider, and I would again highly encourage you guys to watch that video on the macros and the fundamentals evaluations. We go over my price target. We'll see if those levels get hit. We'll see if we actually break down below those levels. In my opinion, you know, it's a tough call, but in my opinion, we're probably not going to see the Nasdaq trade below that level because that's going to put the valuations more attractive than where they're trading right now. So definitely, you know, watch that. But again, shout out to everybody. Thank you for joining in. I really appreciate each and every one of you guys. I know it's a tough market. I know it's you know, very, very unfortunate, very frustrating, very discouraging. But we're all in this together. It's not just, you know, us, it's not just you, it's the entire world. It's the global markets. The United States is one of the most liquid markets in the world, one of the most biggest markets in the world. So if tech takes a beating, the averages takes a beating, we're talking about the entire global markets, right? So I think if you were to look at my world indices, let's take a look at where everything else is trading, right? So this is going to be the world indices. Russell down, we've got Nifty and Sensex. These are going to be Indian markets down about 1% each. Dow Jones, this right here is going to be Nikkei 225. That's going to be the Japanese-Chinese market. S&P is down, of course. And then let's take a look at the Australian market. That's going to be ASX. Let's see if we can actually find that index. But yeah, I mean the entire world is actually going. Well, it's the indices are, right. Hello from Denmark, Daniel. Thank you for joining in. Happy Puppy, thank you for joining in as well. This right here is going to be TradingView. Again, if you guys want to get access to my charts, the Patreon link is going to be down in the description below. And I've also pinned that on to the top post. So if you want access to the TradingView charts, that will automatically sync over to your charts as well. You can check out the link down in the description below as well. We're not facing a crash, Victor, yet, not at least until after we potentially, if we see a 20% or more drawdown for the markets, right? So 20% or more is more of a crash territory. Right now the Nasdaq is down over 11%, so we're more in a correction, and the S&P is down over 4.5%, so we are still in some type of a correction. So if I go over to the SPX, thank you so much for the donation, Happy Puppy. I really appreciate that. And if you don't mind sharing your name, then I can give you a shout out as well. So thank you so much. This right here is going to be the pullback territory for the S&P. And, you know, this is something that we have discussed. Like, if you were to go back to my videos from, like, back in February, and again, there's no way for us to time the market. So I'm not saying that I was able to predict or time the market. Absolutely not, because it's almost impossible to do that. But I wanted you guys to understand that there's going to be an opportunity in the future when we are going to potentially see a correction of maybe 8 to 10%. Right? And there was a psychological resistance for the Nasdaq. We mentioned 14,000 roughly. For the S&P, it was 4,000. And right now we're seeing that correction. Right now the Nasdaq is down over 10%. The S&P is down a little bit over 4.5%. And of course, when that happens, the individual stocks take a much bigger beating. You know, some cases 2, 4, 6, 8, 12, 16%, 20% for some of those high growth, high speculative names are down 20, 25, 30%. from all-time highs. Like NEO is down over 40%, so that's a pretty significant sell-off. But you also have to understand the reason behind it, right? Why is this happening? What's the main cause? So again, I'm going to quickly break down this thing, which was something that we broke down earlier today. Let me see if I can find that. So we're going to go over to this, and we're going to go over to this, and we're going to launch this. So this is available. This is a video that I posted. Again, I would highly encourage you guys to watch that. It goes over the macros and the fundamentals. But one of the biggest reasons why the markets are down, right? And this is as of today, March 5th, 2021. It's because we saw record shorts for the bond prices going down, so bond prices going down, and the yields moving higher. So when yields go higher, there's basically two things that happen. So the two things are going to be these two things right here. So the first one is going to be stocks become less attractive because now bonds are kind of fighting with the stocks in a place for the portfolio allocation. So when you look at a portfolio, it's basically broken down into stocks, bonds, other asset classes as well. But when the yields start pushing higher, they're competing with the stocks, right? And that's what's called a equity risk premium. So all this was covered in the video, and that basically becomes less appealing to invest in stocks because there's a lot of risk involved, and risk-free rate for the yields becomes more attractive from an investment standpoint. And the second reason is going to be it creates less desirable growth opportunities. So debt becomes more expensive. So we've got mortgage rates, we've got business loans, we've got credit lines. All these things basically become more expensive for businesses, for corporations. So they're not able to grow as fast when interest rates are going higher. So that's one thing. Those are the two things to watch. Now we also go into this rotation that happens because of rising rates, and we go from a risk on to more of a risk of behavior. And what that means is people are not willing to take as much risk in the markets anymore, right? We're becoming risk averse in terms of behavior, how we invest, right? And that's when tech growth versus value cyclical comes into play. And that's what exactly what we're saying is a movement away from tech, a movement away from growth over to value and cyclicals as well. So that's more of a macroeconomic level what's happening. We don't have to go over the chips shortage, but this right here is going to be a good representation as an example exactly why when yields go up, that creates a lot of pressure on the earnings of the S&P 500. So you'll notice that for the past a lot of years, we've had a pretty significant gap between the yields for the 10 years. So that's going to be 10-year treasuries and the S&P 500 earnings yield. But right now, when the yields start pushing higher, we see the earnings yield potentially, if it starts to come down, this gap is going to get smaller and smaller and smaller. And that's what's leading to the bonds becoming more and more appealing and equities becoming less attractive as an investment, hence a flight to safety or flight away from equities. So moving forward, this is right here is a projection as the economy reopens back up. We have this reflation trade, and basically people go out there and start spending money again. The earnings will eventually grow. That's the forecast. And UBS put out a study going over how they see 25% increase in earnings and 17% increase next year in the earnings for the S&P 500. So as the bond yields start pushing higher, as the earnings start pushing higher, this gap is expected to be maintained in the future as well, according to a lot of analysts. And that's what's going to help the markets and the yields both push up at the same time. So we'll see. All right, let's take a look at the markets really quickly. The S&P, I think, just turned green, and we're up about 25 basis points. Let's take a look at the NASDAQ. If you are somewhat... All right, so we are pushing higher a little bit. So we are down just about 60 basis points on the day now. I might as well just give you guys a target. For the NASDAQ, I'm expecting, again, this is not something that has to happen. This is not something that we're going to see potentially, but in my opinion, for the NASDAQ, we could see a drawdown to 11,800 points. That's my estimate. That's kind of like what I'm projecting. That's going to put it roughly down about 16% from all-time highs. Correction territory, of course, but not a bear market. For the S&P 500, I'm expecting 3,510, so 3,510. That's my expectation. Again, it doesn't have to hit those targets. We could very well consolidate here, start reversing and push up, but it really has to do with a lot with tech. So the NASDAQ really pushing higher. Let's take a look at the ticker symbol IXQQQs. So it's crazy because every time I go to bed, the markets drop. Right now I'm up and it's almost 11 p.m. here and the markets are pushing higher. It's crazy. It's like almost that I can't go to bed. Let's see how many people we have watching. So we got 455 people watching. Guys, make sure that you drop a like. Again, it really helps out with the channel, so thank you so much for that support. But it's just insane that every time I'm up, the markets do have some type. Wow, the Qs are down only 30 basis points. And guys, you also have to understand how the narratives change, right? So the narratives basically changed over the last few weeks. It's turned really bearish. And I also talked about that in the NIO and Tesla update on the social cues, right? On the social cues, you have to understand the sentiment and the social cues on the markets, right? But what have you heard from me so many times? Right? Every time I go to bed, it drops. And then I'm up right now and it's just starting to recover. It's crazy. Stay awake, please. Sheila, yeah, I'll be up till like 3 in the morning. I'll be up to make sure that the markets end the day on greens. But we'll see. What is the first thing that we want to see in the market? What is the first thing that we want to see? We want to see consolidation. We want to see some type of consolidation. So Freddie, it could be a green day for the S&P. I mean, it's already looking like we are pushing higher. So let's go over to the main watch list. The S&P just turned green. We're up 30 basis points, and the Nasdaq is potentially even pushing higher. So we'll see. If it's a green day, it's a green day. But the overall trend hasn't shifted yet. So I'm not comfortable kind of signaling the green light here that everything's gonna be fine tomorrow or next week. We're gonna find out more about where we end up. So, yep. So let's take a look at Palantir. We talked about some of the support and resistance levels for Palantir and a lot of other stocks in the Discord, which, by the way, if you guys want access to that, if you want to basically get access to the charts and get access to our Discord and everything else, get more involved in our money investing community. So the link is going to be down in the description below for the Patreon as well. But for the Nasdaq, for the Palantir, we mentioned 2250 as the next support. So this right here is going to be the main chart. Let's go over to Palantir. You'll notice that 2250 is a level. 2250, 2285, you can call it either way. So 2285 is going to be the support level to watch right here. So right now we are kind of hovering right above 2250s. So we'll see where we close. We'll see where we close for the broader markets. So again, from a QQQ standpoint, from the Nasdaq, S&P standpoint, the pattern has shifted quite a bit because we were trading below the moving averages. If you were to look at the S&P, you'll notice that we are getting tagged at that 50 EMA. So the high for the day is 3,808, and that 50 EMA is sitting at 3806, right? So we're kind of tagging that resistance and then getting rejected further. This has been crushing. Yes, I know. Everything has been down quite a bit. Look at this. So a lot of stocks have now turned green. Alibaba did, Best Buy, Microsoft, Target. We're kind of on the brink for Facebook, but then everything else still has a lot of runway and a lot of work to do. So Boeing also pushing higher. So we're seeing a very similar, movement across the board. This is just crazy. Like, if you were to look at all the stocks and all the patterns, you'll notice that everything is moving in a very similar direction, right? We basically bounced off of this level. When did we bounce off of this? Let's go over to Qs. So let's go over to the Qs, and we bounce off that support at 1125, right? And this right here, the massive candle coming in at 1155, right? So let's take a look at where Tesla's trading. Let's take a look at where NIO's trading. So NIO and Tesla, they're both down. Let's take a look at some of the EV stocks. So Tesla down over 6%. Let me actually see if there's anything going on Bloomberg, because this is surprising. I mean, we're seeing a pretty significant push higher quite a bit. There's a lot of buying pressure coming in all of a sudden. I mean, this can't just be because I'm live right now and I'm awake. I mean, this has to have some type of an underlying reason why we're seeing such a big push higher. Let's take a look at the yields. Let's take a look at the 10-year yields. So the 10-year yields are down 76 basis points, so they are coming down a little bit. So it's going to be the 5-minute chart. And you'll notice from 11, or no, this is 8:35. 5-minute charts. So from 11:05, you can make an argument that it has pulled back close to over 1.75%. And that could be one of the reasons why the Qs and the S&P is pushing higher. You know, and because we are pushing higher. I mean, the S&P is now up over 30 basis points. So a lot of the stuff is turning green. AMD is now only down 77 basis. Like, look at this buying pressure. Like, look at how many people are just like grabbing onto those shares. Like, Apple potentially will even close about 120. You know, after retesting 117. Stay awake, Jimmy. I'm telling you, this is crazy, because the moment I got live, everything just reversed. This is Amazon trying to find support at 29.50, so we'll see if we actually break out over that. Well, do not go to bed, for everybody's sake. Visa turned green as well. Microsoft is now up over 1.3%. So, I mean, this happens. I mean, this happened last week as well, right? This happened last week as well, when the Nasdaq and the S&P will kind of push up, have a fake out, will sell off even further. So again, just to give you guys a more broader perspective, there's still inflation fears, there's still inflation expectations in the future, and then, you know, for the broader markets, the trend is still kind of on the downtrend. Like, we're still breaking down below those moving averages. So there's no clear change in direction yet. Like, the very simple example I can give you is if you go over to Apple, right? Apple is kind of like the main, like a very, very simple stock to analyze. And it's been around for a really long time. It's gone through a lot of different market environments. So you'll notice that coming in from like September, right? It was down 25%. It was down 25% from highs of 137. We sold off all the way down to $103, 24% drop. We were trading between these lower highs and lower lows, and then eventually it ended up kind of consolidating sideways and then pushing higher, right? Breaking out of those symmetrical triangle and then trading all the way to new all-time highs. So this again is a very similar pattern for Apple, right? And we've seen this several times in the past. I mean, there's absolutely no reason. If you're holding on to really solid companies, regardless of whether they're tech or not, then you have nothing to worry about. Seriously, then you have nothing to worry about. I mean, this is a correction, happens every so often. Sean, yes, so that's going to be more of a broader scale. Like 5 to 10% is going to be what we mention on a more broader level. So when we talk about the Nasdaq, when we talk about the S&P, a 10% move or a 15% move is quite substantial for the broader markets. It's not something that you can just shrug off, because it's a pretty big move, right? It's the same thing with the bonds moving up from 0.5% to over 1.5%. It's like a 200% move in the bond market, which is quite monumental. So when we talk about the individual stocks, they're going to get hit harder than the broader markets because they have a higher beta, right? Which is a measure of risk, which is a measure of volatility. So it's really challenging for us to understand the correlation. Let's say the Nasdaq drops 10%. What's going to be the correlation to Tesla? How much is that going to drop, right? That's a little bit challenging, but we always have to understand, you know, these stocks will move in a much higher relative beta to the S&P, to the Nasdaq. So yes, Tesla is down from 900 to 550, so it's going to be like a 500% drop. I mean, 38 to 40% drop. Actually, let me bring out my spreadsheet so that we can go over. Someone get him a Red Bull. I'm drinking water right now, so we'll see if I'm able to keep up with this for another hour, maybe 2 hours. We'll see. So this right here, actually, let me go over to this sheet. And another thing that I mentioned in my live stream, or not my live stream, but my video from yesterday, the daily market update, is when are these valuations going to be attractive again? Thank you so much for that. I really appreciate that donation. I really appreciate the support. So thank you again, and I'm glad you enjoyed the video. Again, if you haven't watched that, I would highly encourage that. In fact, I would encourage you to share that video with other friends and family members as well, because it goes over the bond yields, it goes over the relationship between interest rates and equity markets, asset allocation. It goes over a lot of different things that we can understand and kind of have a level head in the markets to basically go through this volatility period together, right? It's not something that you're in alone. We're all in this together. The whole world is kind of suffering right now at the expense of this rotation and the bond yields and the reopening of the economy, which is a good thing on the economy side, and it will reflect in the markets as well eventually. So again, I'm sorry about being down 12K in ARK funds. I know it's very frustrating, it's very discouraging, but I'm down a little bit over $20,000 in February, and in March, of course, I'm going to be down a lot more than that if this continues. But that's the market, that's the game that we're playing, that's the risk that we take, and it's all part of these market cycles, right? We've been through this. This is not the first time, and I can tell you this is not the last time we're going to be in this as well. So so this right here are going to be some of the valuations. So now Tesla trading as low as 525. Let's see, where was it retesting lows of on the day? So 539, 540 was the low for the day. So you'll notice that we came down to that support, and the price to sales was 16, and the forward PE was 127 at one point today when Tesla was coming down. So it's really, Alex, there's absolutely no need to donate. I really appreciate you as it is. So just thank you so much for watching the channel and supporting. There's no pressure there. So again, thank you for watching as well. So I appreciate that. And at what point are all these valuations going to become attractive to all the fund managers and all the institution investors again, right? That's the big question. I mean, are people not going to buy Tesla at like 400 or 500? Are people not going to buy Apple at under $100 a share? Are people not going to buy Amazon under $3,000? So those are questions that I really look at, and I try to answer, what's the valuation opportunity cost for a lot of investors out there, right? And if those opportunities are going to present themselves, are people not going to take advantage of those? And are they going to pass those for other assets? And the answer to me, most often than not right now, is no. I mean, if like NVIDIA, for example, right now trading at 485. How many of you guys think that NVIDIA does not deserve this price target right now? I mean, it deserves to be over 500. How many of you guys think that this is a pretty overreaction considering the earnings report that they just released? Let me know in the live chat. What do you guys think of NVIDIA right now? And it was trading as low as 467. 467. Can you believe that? 467. It was trading as low as. Just a few weeks ago, or last week, it was trading as high as 615. Right? A drop of 24-25% in such a short period. So, it's all because of the interest rates. It's because of the growth multiples. It's because how you're pricing these companies again. So that's the market we're in. I mean, ARK Invest Genomics ETF is trading as low as $83. I mean, anything under 100 I thought was a steal for this ETF, but now it's like $83. So some of these prices are just hard to look at. I mean, Lemonade down to $89, $90. I think it was even trading as low as $85. It was absolutely crazy. But the markets are pushing higher a little bit, so the Qs are now, wow, okay, so we are pretty much pushed up till break even. And the SPY is up over 41 basis points. Sick and tired. So No, it's right. I mean, you're right. That's one of the reasons that we discussed in the video. Again, you're more than welcome to watch that. We talked about the valuations, we talked about the fundamentals, we talked about the interest rates as well, because that's happening more on a macro level, right? Interest rates go up, stocks become less appealing, debt interest rates also go up, and that's what triggered this sort of like an overvalued tech sector to basically roll over and pull back and consolidate and have a correction. So you're right. I mean, tech was also overbought and overvalued, but interest rates was what triggered the markets to basically have this correction. And there's also other reasons, right? Global chip shortages. So let's take a look at some of these. So the first one was, of course, on a macro level that we talked about. Again, actually, let me see how many people we have watching. So got 869 people. Again, guys, make sure that you drop a like. I really appreciate that. Let's see if we can get up to at least 300 likes. So reason number one, we talked about interest rates. We talked about rotations out of tech over to some other cyclical value plays. This right here is going to be the global chip shortage that we also talked about, right? Massive shift in demand from 2020 to 2021. There's a lot of challenges because TSMC and those chip makers are one of the ones that a lot of American companies kind of rely on when it comes to manufacturing production of these chips. And right now, we're not going to stabilize for that global chip shortage until the second half of 2021. Chips and semiconductors are used in almost everything: automotives, electronics, the gaming industry, utilities, industrial, you name it. So that's why we're seeing such a significant supply and demand imbalance. Another reason is going to be, by the way, this right here was such an interesting fact, right? So I don't know, again, if you guys haven't watched the video, we talked about this in more detail, and I want you guys' feedback and opinion on this as well. So, all right, so talk about this. So 248 SPAC IPOs in 2020. Can you believe that? 248 SPAC IPOs and 186 SPAC IPOs in 2021 so far already. We're 2 months into the year and 186 SPAC IPOs in 2021. What do you guys think about this stat? What do you guys think about this? And then $83 billion raised through those SPACs in 2020 and $38 billion raised through those SPAC IPOs in 2021. So these right here are some stats to basically, like, these are jaw-dropping stats. An average IPO, $296 million. So my kind of thesis was that, there's too little capital chasing too much opportunity, right? So there's obviously people liquidating a lot of their own other securities, their stocks, to basically chase whatever other SPAC that they have. And again, there's no offense to any other SPAC out there. They all have a lot of great fundamental businesses and valuations. But this chart is just crazy to look at, because when you think about these 2 years, so 2020 and 2021, we've got 248 and 186 SPAC IPOs. And over the last like 12 years, look at this, less than 60 IPOs per year. I mean, there's been years when we just had 15. We're talking 15 like in a week at these levels. So, that's kind of like a big change in SPAC IPOs as well from 2009 till February 2021. And just something to consider, like, this was crazy to think about. And then of course, going back to somebody who mentioned, this right here is the valuation part, right? The S&P 500 has had a PE ratio that we also discussed as of February 26, 2021, close to 43.75, right? That's going to be S&P 500. NASDAQ was trading at 38.46, and it's more than doubled. It's more than doubled since a year ago. So you'll notice how the prices have gone up relative to their earnings. So PE is simply what? Price over EPS, right? So when the PE ratio is going up, we basically have either of two things. Either EPS stays flat and the price moves up, or we have the EPS go down and the price stays flat, right? The EPS will go down and the price goes up. And we've had the mixture of both, right? We've had EPS earnings also go down for a lot of companies in the S&P 500, and we've had the price go up for a lot of these companies. For tech, that's moved up the average. It's really skewed the average for the S&P 500 because tech prices skyrocketed. Energy, financials, earnings dropped pretty hard. So you have this kind of like a seesaw effect, and you have the price to earnings basically more than doubled in 2021, hence the overheating of the market from a valuation perspective as well, trading at much higher multiples. But although it has come down a little bit, so you'll notice that we are trading at 38.3, something like that, back in March, like the first week of March. earlier this week. And the dot-com bubbles, which everyone likes to refer to, we were trading as high as 40, 45 levels. So back then, it was like as high as that level. And when the bubble burst, we were trading as low as like 20, 15 to 20. But I have a strong case as to why this is going to be like the old PE ratio, and we're going to figure out a new base. But that's for a different video. I'll put a video out in more detail as to why I personally believe that this is going to be the new normal for the S&P 500 PE moving forward. But this right here again is going to be the entire market. Let's take a look at the markets right now. So, wow, do you guys want me to go to bed? I'm actually considering going to bed right now because it's pretty late. It's 11:15 p.m. So now the S&P is up over 66 basis points and the Nasdaq QQQ is up over 40 basis points, and a lot of stocks have turned green. So let's take a look at the markets here. Everything is now potentially turning green, so we are pushing higher, but there's still opportunities like Shopify down over 5%, trading as low as 1,089. I think Shopify is a great company in the future. Like, e-commerce is going to be really big. I mean, Enphase Energy, I can't believe it's trading as low as 142. Such a great company. Boeing making a solid recovery as well. Corsair Gaming is one of the stocks to be added in the growth portfolio. Maybe I'll add some more. It's trading as low as 31. Again, this is a stock that actually in the gaming industry is going to do really well. So the Q is still pushing. They're still charging higher. It's great. It looks good. Ooh, look at that for the SPY. Massive recovery. We just need to hit new high of days. That's going to be really important. I mean, high of day is at 380.59. That's the level that we talked about on the white chart, I believe. If you go over to SPY, and let's go over to the 4 minute. Yeah, so the 4 hour chart, you'll notice at 380. Actually, I'll go ahead and turn that into a resistance because we are trading below that level. So for the SPY, I want you guys to watch 380 today and see if we actually close above that level. That's going to be important because we broke down, and this is the downtrending channel, right? We actually came down to retest this lower low. So that's the thing with technical analysis, is that, you know, a lot of people are watching these levels. We tested that lower low here, and we are now bouncing up. Now, the important thing is, are we going to break out over 380, or if we're going to get rejected here once again? If we break out over 380, then we could potentially retest 385. That's going to be the next resistance, kind of aligned with that lower highs. So right here, aligned with those lower highs and aligned with this previous resistance, right? Double top resistance here at 385. So when you have that intersection between the lower highs inside that downtrending channel and the horizontal resistance, that right there makes for a really strong resistance. So we'll see if 380 level gets validated today as a resistance, if we actually break out or not. And then QQQ, I believe it's going to be 309. So we actually came down to retest 297. That's interesting, right? You know, if you guys did get a chance again to watch the video, I mentioned 297 as the next support, and then $310 is actually going to be the next resistance to watch. So we'll see if that level actually gets broken. It's kind of difficult to understand right now, but 297 is going to be the support. Even on the daily chart, you guys will notice that, you know, we came down. This is a back test of resistance. We came down. This is interesting. This is really interesting because at one point the Nasdaq was down over 16% already. Okay, so it was not. It was not. I want to say it was down a little bit over 12%. So it was down 12.5% from all-time highs at one point during the day. So, I mean, that could shape up to be a massive inverted hammer candle if we close exactly as this right here. I mean, this is just so much buying pressure coming in. So a lot of people just stepping in at these levels. So this is basically the long wick is bulls kind of stepping in at those prices, right, for the NASDAQ. So, and that's a big fight between the bulls and the bears, right? That's what you gotta love about the markets is like there's like there's like two sides to every story, right? Gio, thank you so much. I really appreciate the support. Thank you for that. So Q's SPY pushing higher. We'll see if this thing kind of continues. I don't like this candle that just closed for some reason. That could potentially be like a shooting star. We could see some type of reversals here potentially. We'll see. We'll see if this continues. But the candle just did not close good for both of these ETFs. I feel less lonely here. Yeah, just come on board and bring your friends as well. Everybody, just come on board. We're gonna talk about the markets. We're gonna talk about the broader markets, like economy-wise, where we're trading, and talk about a lot of different things as well. I haven't even looked at yesterday. I didn't even look at my portfolio. I was like, I went in the morning pre-market. I bought some, and then that's it. Didn't even look at anything. And I think I bought some Tesla, bought some ARKG, Palantir a little bit, and then I think I bought some NEO today in the main account. So we'll see. What's going on with AMD? So AMD is really, really disappointing. A lot of people right now, including myself. I mean, this is a stock that is struggling. It's just been down. It has a very similar pattern as NEO. It's just been trading down. It's just been making lower highs, lower lows, getting rejected, and the pattern's really weak. We came down to the support at $75, close to 74.50s. Is there some diamond hands gang here I want to join? There is. We're holding. We're gonna be holding for the long term, and these are companies that I believe in so much that if they're willing to go down, I'm willing to go down with them. We'll see where they end up, because they're beaten down quite a bit, and that's a sentiment and social cue that I was waiting for, where everyone, now that you kind of get a feel for the markets and get a feel for where everyone's thinking about where everyone's behavior is at. Everyone's thinking to short the market. Everyone's bearish on the markets right now. It's like that's what the narrative is. Back in January, everyone was so bullish. There was so much euphoria, and everyone had a lot of calls, a lot of bullish sentiment on the markets, and now it's completely shifted, right? It's a little bit bearish, and people are taking short positions. Let's take a look at the put call ratio. Mai, I appreciate that. Thank you. So yeah, I appreciate that. So this right here, put call ratio at over 1, right? So if you were to go over, and if you do like a very simple search, I've actually looked into this in the past, and we're gonna go over this. So what does that actually tell us, right? What does this put call ratio tell us in the markets? So we're gonna go over and we're gonna read this. So put call ratio indicators relative of trading volumes, put call, all that. A put call ratio above 1 is considered to be an indicator of a sell-off, while put call ratio below 1 is an opportunity to buy. Some traders use the put call ratio as a contrarian indicator and buy when the ratio is above 1 and sell when the ratio is below that figure. And the reason is because right now it basically tells you there are a lot more put options open than there are call options. So let me go over to this. I think it was right. So when the ratio is high, it suggests that people are either expecting or protecting more readily against the future decline in the price of the underlying. So put call ratio between 0.5 and 1 is considered sideways trend in the markets. And so the ratio, like price when call volume is. So if you were to look at it right now, it's trading well over 1, right? There's a lot of put options open, and there are call options. And if you were to go back as far as March, you guys will notice it was trading as high as 1.837. This was the global pandemic, March 2020, just same time last year. And even during the recent sell-offs, like this is going back as far as October 2020, right before the elections, we saw a significant drawdown for the markets. This right here is coming in from September. Same exact thing happened. So another really, really important metric for us to look at, because the more it pushes higher, the better it is for the markets and the better opportunity it creates to kind of buy in, because this is going to get exhausted and get tapped out at one point. Everyone's going to be really, really bearish on the markets. Everyone's going to have a lot of put options on the markets. And again, the markets are very counterintuitive. They work in the exact opposite way that most people are thinking about. And it goes back to January and February when we were thinking a lot of bullish sentiment on the markets as well. So, all right, let's take a look at the Qs and the S&P. So again, we are struggling a little bit. Minor pullback here. Let's take a look at the markets right now. Ooh, a lot of stocks turning green. Microsoft now up over 2%. Chevron up over 3%. GameStop pulling back a little bit. None of the big tech companies other than Microsoft have turned green yet. The NEO pushing up as well, so we'll see if it closes above 38. Tesla, we'll see if it closes up above 600. Tesla is at 586. So 587 right now. The video quality is really poor. Is it not 1080p? It should be 1080p for the video quality. Let me know if you guys can see that okay. Maybe, Chris, maybe you want to refresh that, or maybe go over to like settings and see if you have the option for the 1080p video quality. Let's take a look at Apple. Apple, again, 120 is going to be the level we're watching. So I sent a whole list of the support levels that, it's funny because I sent that list in the Discord this morning of like 10, maybe 15 stocks for the support levels that we need to watch. 1 minute after, drops, breaks through all the support levels. And right now we are pushing up higher once again. So we'll see. We'll see if that level gets validated. For Apple, that's going to be 120. For Tesla, that's 600. For NEO, that's 3850. For Palantir, that's 2250. For, let's see, for other stocks, Shopify was like 1010. We'll see if that level gets validated as well. So, yeah. NEO, how low do I think it's going to go? Let's go over to our chart. So, if you go over to our white chart and type in actually NEO. So this was the complete technical breakdown. I mentioned that 3850 is going to be the first support level. Right now we are way below that support and we did break down. I mentioned that 200 simple moving average, kind of aligned with this green rectangle previous resistance, is going to be the next support level to watch, right? Below, like exactly at $30. We came down to as low as $31.91, so not quite $30 yet. But this has been like a really, really overextended move for NEO. Like it's just been, the RSI is trading so low. There's not a substantial decrease in the accumulation distribution for NEO's shares. And then if you were to look at something like Unity Software, you look at the accumulation distribution, like you see a substantial decrease, right? You see a lot of distribution of shares for Unity Software, but for NEO, you can already see the difference. I mean, it's not a crazy amount. I mean, it's still hovering around 3.1 billion, right? So it's like right around that level. For Palantir, I would continue to watch 2250. For Tesla, I would continue to watch. For Tesla, this is going to be, I would continue to watch like inside this sort of demand area. And 600 is going to be the level to watch like today. Let's see if it actually closes above that level. Let me see if Tesla, I have more analysis over here. So we'll see. I mean, where the next support is going to be. You know, we have validated this level going back as far as December at 550. So I will go ahead and put that on the chart at close to 540 levels for Tesla. But again, it's a similar move till NIO. It's just like a really overblown move. It's just, you know, it's because of the broader markets and the valuations and a lot of multiples, and we have to take into that account and what the future looks like for these companies, right? Iggy, yes. So as soon as I place those orders, I send that alert over to the Discord group as well. Everyone who's part of it. There's mostly always going to be buy alerts because you know, over the long term I'm going to be a net buyer of stocks unless they hit my price target. For AMD, I have close to about $115 to $120 price target. For Tesla, it's at close to $1,000, and then for Palantir, I've got $45 price target. So those are the three positions. I also bought in Corsair, which I alerted everybody. So again, yeah, if you want to join, the link is going to be down in the description below, and I do alert everybody before I make the purchase. Alright, so let's take a look at the Qs and the SPYs. We are pushing, guys. The Qs are up over 0.5%. The S&P is up over 76 basis points. We need to stand together. Harry, yep, that's absolutely true. So Apple came up as high as 119.70, and then we pushed up. Only these stocks in the red. Oh, actually, that's not all stocks. So this right here, okay. So we still have a lot of room and a lot of ground to cover. Carnival down over 6%, American Airlines down about 6%, and Phase Energy over 5%. Tesla, Shopify, Square actually took a huge beating. I just can't believe it was trading as low as 191. I mentioned $200 support for Square. We came down to 191, and right now we are pushing higher once again with this entire market pushing up. But Square, I mean, it was just below 200 was just absolutely crazy price target. Hamad, yes, I did buy some NIO today. A little bit, not a whole lot, but a little bit, because we need to see some consolidation and some confirmation for our trend reversal. And then once we see that, you know, I'd be more inclined to buying more, because that's going to be a potential uptrend pattern or change in direction or shift we're going to potentially see. So one of the most important things, guys, right now is for the bulls to regain control, and when that happens, is for us to identify that. Is for us to really understand, well, okay, now the patterns are making higher highs and higher lows. So these pullbacks are going to be more of buying opportunities as opposed to like right now buying in a downtrend, or even buying during these pushes higher can lead to further declines. Like right now, look at that Square dropping once again, right? So it's really difficult to understand who's buying, who's selling, and whether these moves are going to hold up or not. So look at that. QQQs and SPYs, right? Pulling back once again. So the Qs just went negative again. We're down about 10 basis points. So there's a lot of volatility, right? It's just a lot of volatility right now in the markets. And Powell spoke yesterday. I was watching that. We broke it down in the market brief, and we also broke down that during my macroeconomic video as well. But Palantir is showing signs of consolidation. I agree. It is showing signs of consolidation, but it's just getting beat hard with the broader markets. It's like one of those things with Alibaba. It was like, regardless of how good of a business you can have with Alibaba, like the fundamentals, like it's so undervalued. It's so cheap right now, Alibaba. It's not even funny. And because of the market environment we're in, because of everything that's going on with the potential delisting bill that was signed back, last year, and Jack Ma went missing. Then we had the Ant Group IPO that was kind of delayed. They were just getting hit by hit by hit, like one after another, like negative catalysts coming in, and they just came down to 210, and then rallied back over to 270, and now with the entire market, they are down again. Right? So let's take a look at where Baba is. So Alibaba is at 231 now. Yeah, I mean the Qs has dropped, and so did SPYs. So I'm not surprised that all these companies are also pulling back as well a little bit. So Apple is now down to 118, Amazon down to 29.49, so 29.50 is going to be the level to watch. Alright, so let's take a look at how many people we have. So 1,000 people. Again, thank you so much guys for joining in. Let's see if we can get up to at least 500 likes. So make sure that you drop that like button. Really helps out with the YouTube algorithm. GME holding up. Is anybody actually trading or investing in GameStop right now on this live stream? So let us know in the chat if you are someone who's trading or investing in GameStop. If you are, I mean, congratulations. You're up on the day relative to the other markets and other stocks. So. Home account, you're contradicting yourself. In what? If you don't mind elaborating a little bit. What was the contradicting part? So we are getting bought up a little bit again. Luca, thank you so much for that. I really appreciate that. Let me see what's your question. Apple, in my strong opinion, we also had Daniel Labs on the channel. I'm not sure if you watched that interview that I had with him. He's covered tech for the last 20 years on Wall Street, right? He's very, very experienced. A lot of analysts hold him in high regard. And we really appreciated his time and his analysis on the markets. Apple, he has a base case price target of 175 and a high price or bull case target of close to 225. We talked about the super growth cycle, a growth super cycle, so to speak, for 230, 240 million iPhones this year. And they're potentially going to come out with an EV, so I could easily see that acting as a huge catalyst for the company. If not right now, eventually it will get priced in. Right now, nothing's getting priced in. You can have companies, report great earnings, and that's still going to negatively affect that stock because the market is pulling back. So that's another thing. Like in my opinion, once the company reports great earnings and beats everything, like expectations-wise, and if it still drops, it's not priced in yet. It's not priced in my strong opinion, and that will eventually get priced in the future. So Apple, I would say strong company. NIO as well. I'm very, very interested to find out about their battery as a service, and then of course their ET7 launch, 500 battery as a service that they're going to launch later this year. Your potential penetration in Europe. Move America is also going to be later this month, so maybe I'll live stream that. So bullish on NIO as well, personally. And then Nikola, I haven't really looked into Nikola all that much, so maybe you want to do some more research on that. For NIO. So yeah, so we do have a private Discord. Ryan, if you want to check out the link down in the description below, that you should have access to it. So let's take a look at Tesla, down to 183. So pulling back. And then NIO also is pulling back, right? Yeah. So let's take a look at EVs. So we got Li Auto down over 2%, CCIV down over 5%, Tesla over 6%, Nikola over 6%, NIO over 8%, XPeng over 8%, Ride over 8%, and Workhorse almost 9%, Hyliion down over 10% as well. So yeah, everything is just turning a little bit red because we are getting weak with the relative strength here. I just want to see if they have anything going on at Bloomberg.
Sticking with us, coming up on the programme, up next, the auction block. Junk-rated companies borrowing at an unprecedented clip. That conversation coming up next. From New York, this is Bloomberg.
Tesla plunges, wipes out $90 billion market value in 1 week. Oracle is going up. Let's take a look at Oracle. Wow, 7%. It just hit a new all-time high. Wow, this has definitely been a strong play coming in since March of 2020, but even recently coming in from November, it's up 27%, and even today up over 7%. So that's pretty good. Yeah, I am a little tired right now because it's past 11:45. I'll see if I'll probably do this for like another 15, 20, maybe 30 minutes, and then maybe I'll go to bed. But want to keep that markets up, right? QQQ is still in the green right now. The S&P up about 0.5%. So this is my technical analysis right here. So we came on live here. This was us coming live. We were energized, we were pumped, we pushed up, and right now we're getting tired a little bit. So we'll see if that holds up. But hello from Sweden, Alan, welcome. Appreciate your support. Thank you for joining in. What's my opinion on Microsoft is not in FNGU? FNGU, I think eventually will be the play of 2021 or 2022. So I'm just waiting. I'm honestly waiting. It's going to be a very aggressive play, but I wouldn't mind taking a little bit of a speculative play on this. And the reason is because it's like at $27. Again, this is not financial or investment advice. This is very risky, so please always make sure that you do your analysis on this. But FNGU, for those of you who are not aware, is an ETN, is a 3 leveraged ETN that is very, very aggressive, moves in a very volatile way. And because of this tech sell-off, it's down from like $44 all the way to lows of like 24. So it was down over 44%, right? But this right here was the play from March 2020 up until like September or October, I want to say. So like coming in from like $15 or even further back. This is only October. And this also had a 10-to-1 split, but it was at one point trading as low as $2. It went up to Steve, I really appreciate that. Thank you. It means a lot. And yeah, so thank you so much for joining and watching the videos. I really appreciate that as well. So it was over 1,700%, and this is going to be eventually a really, really strong play because it has 10 companies and 10 of the biggest tech companies. So it has Tesla, Twitter, Amazon, Apple. I think it has Nvidia, and I think it has Alibaba as well. But those are tech companies that obviously are getting beat down because of the interest rates, because of a lot of different things. So eventually, Siddharth, yes, I am from India. That is correct. Is AMD in green? No way. I don't believe you, Mohit. No. This can't be happening. Oh, it is. Okay. Up over 13 basis points. Not bad. Yeah, we'll see if we see any recovery for AMD, for advanced micro devices or not. PayPal also, I personally bought a little bit of PayPal this past week. This past week has absolutely been, it's been a really long week. Like the entire month of February was really long. It felt like it just, even though it's the shortest month of the year, it just felt like it never ended. And March is also starting to feel like that, right? let me know in the live chat if you guys think about that too, or if I'm the only one actually feeling that way. But March has also been really, really long so far, only like the first weekend. But it's just been the markets. Marco, for any individual stock, we really have to understand the broader market. So if we can get a hold of the NASDAQ and the S&P, we can really understand where the bottom is going to be for a lot of these stocks. So for the NASDAQ and for the S&P, I've also kind of put out an estimate of my own. We'll see if those levels get hit. If they don't, if you recover already, if you consolidate and start pushing higher, then great. But if we do retest those lows, then I will be more inclined to kind of buying more at those levels for individual stocks as well. But for the NASDAQ, 11,800, and then for the S&P, close to 3,500 are going to be some levels to watch. All right, hello from Hawaii. Thank you for joining in. NASDAQ doing well. Let's take a look here. So, all right, so we're up again. So we're up a little bit over 44 basis points for the NASDAQ. The S&P pushing higher, up over 75 basis points. And we're up for a lot of those stocks as well. So a lot of them are turning green. Let's take a look at Bloomberg if they have anything going on.
That's not what drives treasury markets. I mean, for an auction, it may, but...
So Zain, the short answer is no, because I post a lot of research and a lot of analysis of my own on Patreon. I put a lot of bullish thesis and why I'm choosing to invest in that company and what the price target is for myself. You can take that and kind of combine that with your own analysis and your own due diligence on that company and see if that makes sense to you, right? Whether you choose to invest in that or not is completely based on your decision. But the Patreon is basically a community. We have a little bit over 220 members. On Discord, we have a little bit over 1,500 members. So we talk about the markets. We talk about a lot of different things: fundamental, technical analysis, research, the broader markets, the economics of what's going on with the interest rates, inflation, all those different things. And it's very educational based. So it's not so much about copying trades or basically following people. It's becoming self-sufficient and trying to understand exactly what's going on in the market to basically potentially then invest, coupled with your own analysis on it. Hello from Bali, Bruce. Welcome. Thank you for joining in. March feels like eternity. It's only the first week. Fiverr is actually a good one, Marcus. That's a great suggestion. Let me actually go over that because it's also approaching some, or it was, I don't know if it's up today. It's down about 5%. Okay, so it's actually approaching some good territories. Like 184 would be a good level to consider Fiverr as well. So, that would be the level to watch for Fiverr. Chris, the Patreon link is going to be down in the description below if you want to join the Discord. That's there's also a free version. There's absolutely no need for you to join the Patreon. There's a free version. If you go over to the main channel, you should be able to see the link to the Discord as well. If you want to join the main trading floor, we have a little bit over 1,500 members there. But the paid Patreon is going to be just over 200 members where we talk a little bit more about the markets. But Fiverr, down about 4%. 184 would be the level to watch for this stock. I mean, it did get out of hand a little bit. I didn't expect it to hit as high as 334, and this right here has been a drawdown of close to 40%. So, Nikolay, hello from Bulgaria. So again, thank you so much for joining in. Hello from Moscow. I've actually been to Moscow. I've been to the airport. I haven't really gone out, but it was beautiful. It was really fun to see Moscow and the snow from the airplane. So it was really good. I'm currently in New Delhi. I just got back about a month ago from Boston. I was there for about a few years. So Jack, I'm using the TradingView platform. This right here is going to be the TradingView platform, my charts are also going to be accessible to everybody if you want to get access to my charts. So the beauty of those charts is that if you can type in any ticker you want, so any stock, and if I've done analysis on it, these levels will be there automatically, and they'll sync every time I make changes. So that's a big value addition if you guys want that. Nicholas, hello from Germany, hello from Brazil, hello from Singapore, shout out to you guys, hello from Sri Lanka. I've been to Malaysia but not Singapore. I want to go to Germany and I want to go to Brazil as well. I've been to Venezuela but I haven't been to Brazil yet. Hello from Mexico, so Chicago, Chitra, I was just there. I spoke to you, so thank you for joining in. I'm visiting family right now for a little while. Right, so let's take a look at the markets. Wow, the Q's really pushing higher, guys. You guys really want me up. That's what's happening here. It's like I can't even go to bed because the markets are just pushing higher. They're in the green now. We're up over 84 basis points, and the S&P is also pushing higher, close to 1%. Let's take a look at some of the other stocks. So, boom, we are so much in the green, and these right here are going to be some of the ones that are red. So, NEO pushing higher at 36.85. There's a lot of buying pressure that came in after $31. I mean, this has been a really strong move, and across the board, right? Across the board. So that's one of the things that I want you guys to take away from most of these market pullbacks and drawdowns that we're seeing recently, is that when everything drops, when all these companies drop, this has nothing to do with the management or the fundamentals or their products or their services or their future. Those are the dips, or those are the red days that you really want in the markets. You don't want red days when NEO comes out and tells that their management is not going to be doing so and so, and they've completely shifted their business model and their fundamentals have changed drastically. That's when you actually want to cut those positions. So the red days that you really want in the markets are the ones that when the markets, the overall broader indices are pulling back, they're going down, so you can build out much bigger positions on them, on your favorite stocks and stocks that you really want to go over, like invest in for the long term. So, and in the moment, it can be really frustrating. Like in the moment, it's very, very difficult to find those cues that, you know, what is a sound decision and what's not. Iggy, Alibaba, strong. Like fundamentally speaking, it's very undervalued in my opinion. I could see that stock way above $300 a share. It's going to take some time because they have a lot of headwinds related to regulations, scrutiny, their Ant Group IPO. But their core business is very strong. We saw that in the earnings report. So definitely worth looking into on that stock as well. Peter, this right here is going to be Webull. So this right here is going to be Webull, but this is what I actually use, is going to be my TradingView charts. So TradingView is what I use on a regular basis. Steve, yeah, I read that he dumped his Virgin Galactic shares. I'm not sure if it's today or if it's like a month old, or like, because they release their quarterly reports. So usually when we see these reports that come out that, you know, Warren Buffett sold his Apple shares, Shamad sold his Virgin Galactic shares, these reports are a little bit delayed. So I'm not sure if that's actually from today or from like a few months ago. For Tesla, again, you know, kind of aligned with my own analysis that I've done on the stock, and we also talked to Daniel Ives about it on the channel. He has a price target of $12.50 for Tesla bull case and a base case price target of close to $950, and it's kind of aligned with my price target of about $1,000 for Tesla over the long term. We'll see if that level gets hit. ARK Invest is also going to publish their recent report with a new price target of Tesla and what they think about the autonomous driving and how much of a role it's going to play on Tesla as well. So we're up over 80 basis points and we're up over 1% for the SPYs. Is the correction over? It's really difficult to say, but in my opinion, we're not in the clear yet. I'll talk about that during the market update. Well, I'll put that out, you know, as soon as the markets close. which they will in just about 2.5 hours. So we'll talk about that and what I think is happening in the markets right now. This could be potentially, because this is a lot of buying pressure, right? I mean, if the Nasdaq was down over 1.5% at one point, and we are basically going back to new high of days, that's a lot of buyers stepping in. Yeah, I mean, there's a lot of stocks that it really depends on the broader market, guys. If the broader markets found a bottom, all the stocks found a bottom. Most of the stocks found a bottom. If the broader markets did not, and if you have more room to the downside, then these individual stocks have more room to the downside. Kathy is going to say Tesla is going to probably be like $10,000 pre-split. That would be an insane price target, and we've already seen her first price target come to fruition, right? It was almost at $3,000, pre-split. So, all right, let's see how many people we have watching. All right, 1,020. Let's see if we can get to at least 500 likes, guys. Thank you so much for tuning in. I really appreciate that. Jason, thank you so much. I really appreciate that. That's great. Thank you again for the support and sharing it to your friend. That's funny. All right, let's take a look at cryptos. Let's see where cryptos are trading. So Bitcoin up slightly, 48,500. It's been kind of struggling. It's been hovering around 48, 49,000. Yeah, so this right here actually was my forecast. So going back to this presentation a little bit. This was another thing, and I want your guys' opinion on this as well. Let's see what you guys think. So I was just thinking about what's happening right in the markets, and this is obviously not just one single reason. It's like a lot of different things that we have already talked about: interest rates, valuations, global chip shortage. But these right here, risk management, tax management, some things that I was thinking about is that a lot of people bought the dip like back in March and April of 2020. And when you take into account a full year in terms of taxes, in terms of long-term capital gain taxes, they're going to be selling over the next 30 to 60 days, right, to realize some of those gains, to basically pay taxes on them. The second one was margin, stop losses, panic selling. We already know that the margin debt was pretty high recently. So, of course, this right here is going to be the margin debt. You'll notice that it's sitting at well over $750 billion as of October. I want to say like November, December time. So you'll notice that the amount has increased 28% since the same time last year and is up 10% from $659 billion in October of 2020. So that's a substantial increase in margin. So very, very, crazy numbers to look at. And those are going to be some reasons, right? Risk management, tax management, perspective, and a lot of stops getting triggered, a lot of margin calls getting issued. Unfortunately, this is the market environment we're in, which is why I definitely recommend away from margin unless you absolutely need it. I personally only trade with cash. I've never used margin in my life, but maybe that's something that I'll get into in the future. But it's just something that I stay away with. And it's personal preference, right? You may be really comfortable with that. But those are two reasons that we could be seeing some selling pressure take place. Because when we have these drastic moves to the downside, like NEO at one point was down over 13%, those are stop losses getting triggered, in my opinion. That's like a lot of forced selling for that stock. And then this right here was a technical shift. Of course, the broader markets broke down some critical moving averages, and that's what we're still seeing. That's why I'm not 100% positive as to whether we're going to see some type of a recovery and if we have shifted the trend yet. So I'm going to do some more analysis on that part, look at different patterns, look at different charts to really understand, where we could be headed next. And this right here was the forecast. So again, the VIX, you'll notice coming in from March 2020, the pandemic, we hit highs of, 85 if you go across. 85-90 levels, and 20 has been validated so many times, right? If you've been following up with the channel, the VIX, we've been covering so long, like 20, 20, 20, 20, like that's a level that has gotten validated so much for the volatility index. It just doesn't want to go down below 20. And when you talk about resistance, it's just 40. Gets tapped at that resistance and then kind of consolidates and sells off. So I personally do not think that all these reasons, interest rates, valuations, global chip shortage, none of them are as severe as the pandemic that we saw. So I personally, in my opinion, do not see the VIX crossing over 40. That's kind of like the ceiling that I see for the volatility index. So that's going to be sort of like this right here. That's going to be the ceiling, in my opinion, for the volatility on the index, right? For the S&P 500. So yeah, so that right there, I mean, if I could see like a retest of 40, that's going to tap the S&P and the NASDAQ like to form some type of a bottom. Because that's exactly what happened if you go back to October, if you go back to September, if you go back to June and July. Every time the VIX tapped 40, we found a bottom for the S&P after a significant pullback. So that's going to be the most important part. And moving forward, that was pretty much the prediction. Again, this is not financial investment advice. Make sure that you do your analysis. But for the NASDAQ, I said, 11,800, correction of maybe 16%. It's not going to put us in a bear market. It's just going to put us in a correction of 16%. And the S&P 3,500, it's going to, again, put us a correction of 11%. Although this one is a little bit unrealistic because a lot of the other sectors, energy, financials, are pushing higher. So when those sectors keep pushing higher, and then we have the tech selling off, it kind of breaks it even, right? It basically creates this choppy trading for the broader markets. And VIX, I'm assuming it's going to top out at 40. So that right there is going to be the complete analysis on that. We are up close to 1% for the Qs. So that's incredible. And the SPY is up over 1% at this point. Let's take a look at the broader markets and where everything else is trading. So Apple at 120. We're exactly at that support. So we'll see if that support level gets validated. Let's take a look at Tesla. 597, you guys. We're almost at 600. We'll see if we close above 600, if that support level gets validated or not. That's the most important thing because, I'm really witnessing and observing, and I'm glad I did this live stream is because we are seeing some buying pressure come in, and bulls are stepping in at those prices. And this is something that we had talked about in my previous videos and also during this live stream is like, what valuations will be attractive for these companies? Okay, it's not 600, it's not 500, it's not 400. Is it 300? Is it 400? What valuations will people step in and be like, all right, it's too cheap for me to not invest in this company, right? And that's the same thing for Apple, for NIO, for Tesla, AMD, Microsoft, Palantir, Amazon, Nvidia, most of the companies that we cover on the channel. So NEE, Nextera Energy, a really, really strong company in my opinion. And yeah, I mean, they win the S&P 500 like Global Renewable Energy Award like pretty much for the last couple of years. So I think I did analysis on them. In fact, it's glad that you brought that up. Let me go over to Nextera Energy because I think it's really ready for some type of buying pressure because it broke down below these two support levels, right? So there's a lot of pressure coming in. And the next support I would be watching is at close to $68 for NEE. So it's going to be sitting right here. So yeah, it was trading inside this uptrending channel, making higher highs, higher lows. We broke down below the $78 support. We broke down below 72, two of the previous support and resistance levels, and we are kind of bouncing off of $68, $69. But this again is a great renewable energy play, like for the next 10 years. Right, so let's take a look at the markets here. Q's up over 1, S&P up over 1.13. Amazon at 29.83. We've got Apple at 120. Nvidia at 495, AMD up over 75 basis points. Alibaba, Microsoft's really pushing, right? 2.5%. That's a pretty big push higher. What a day. I know. All right, let's take a look at how many people we have. So 1,092. Go to bed so this market can drop. I honestly am probably going to go to bed at this point. It's past 12, and I have to wake up really, really early to put the market update out. So we'll do that. So if you are part of our Patreon, the way you access a chart is that I have created a post with the 3 links that go over this main chart that I have, that also go over the white chart, and that also go over the second chart. That's going to be another dark black chart that goes over NEO, that goes over Palantir, a lot of other stocks. So there's going to be a post that you can look at, or you can message me on Patreon as well, and I will give you access to those. But it basically has all the charts, all the TradingView charts that you can have access to as well on there. So definitely, if you guys want access to it. So again, thank you so much for joining in, you guys. The markets are pushing higher, so I feel like I've done my job. But QQQ is up a little bit over 1%, and the S&P is up over 1% as well. There's a lot of stocks that are turning green, so we are seeing a lot of buying pressure come in, and a lot of bulls kind of stepping in. So thank you so much for joining in, and I'll put the market update out in about 4 to 5 hours, right after the markets close. So keep a close eye on that as well. We'll talk about a lot of different things. Make sure that you drop a like button, subscribe if you're new to the channel. You do not need TradingView Pro. You need a free account, so you can sign up for a free account with TradingView to look at the charts as well. So thank you so much for joining in. I really, really appreciate your guys' support. I really do. And again, happy investing. Stay safe out there. Take care, and I will see you guys in the next video.